So, Netflix just dropped its Q3 2025 shareholder letter, and it's packed with clues about the future of streaming. Today, we're going to tear it down, go beyond the big headlines, and decode what it all really means. Let's get into it.
This is the big question on everyone's mind, right? In this super crowded streaming world, is Netflix's crown starting to slip? We're going to use their own numbers and their own words to figure that out. Here's how we're going to break it all down. First, the headline numbers. Then, a weird little asterisk in their profits. We'll look at how their content is doing, what they're building with ads and AI, and finally, what they're telling us is coming next.
All right, first up, by the numbers. Let's just take a high-level look at how they did this past quarter.
And wow, on the surface, things look fantastic. Revenue is up to over $11.5 billion. That's a huge jump from last year. And their profits, both operating and net income, are showing really healthy, really solid growth.
But let's zoom in on this number, 17.2% revenue growth. That is incredibly strong. And Netflix says it comes from a mix of things, just getting more members, some pricing changes, and a really big boost from their advertising business.
But, it wasn't a totally perfect report card. There was one number that raised a few eyebrows, and it's worth taking a closer look at.
So here's the thing. While all that revenue was pouring in, their actual profitability, what we call their operating margin, it actually missed their own forecast. So the big question is, why? Okay, quick sidebar here. What even is an operating margin? Well, just think of it like this. For every single dollar Netflix brings in, this number tells you how many cents are left over as pure profit before they pay interest and taxes. So yeah, when it misses the target, investors definitely notice. And it all came down to this one single, pretty unexpected thing, an expense of $619 million. This was a one-time charge related to a tax issue down in Brazil, and it was just big enough to throw their whole profit forecast off. But Netflix got right out in front of this. You can see it in their own words, right from the letter. They're basically saying, hey, listen, if you just ignore this one-off legal thing, we actually would have beaten our profit goals. It's their way of telling everyone this was a blip, not a trend.
So now that we've cleared up that little accounting asterisk, we can get to the real story of the quarter. And that story is simple. Netflix's content is absolutely crushing it.
Just look at this Q3 lineup. It was a total powerhouse. You had massive hits returning like Wednesday, you had the nostalgia factor with Happy Gilmore 2, and then this global monster, K-pop Demon Hunters. And it's not just one thing. They had huge international shows and even live sports. They're firing on all cylinders. And when you have popular shows, it leads directly to this. You don't have to analyze this whole chart. The key takeaway is simple. In Q3, Netflix captured its largest ever piece of the TV watching pie in both the US and the UK. Period. And they aren't just holding on, they are actively taking more of our time. Since the end of 2022, their share of viewership is up 15% in the US and a whopping 22% in the UK. They are winning the battle for our eyeballs. And if you need just one statistic to really understand the power of their content machine, it's this. K-pop Demon Hunters brought in 325 million views, making it their most popular movie ever. This proves they can build these massive, culture-defining franchises totally from scratch. We're talking #1 songs, the year's most popular Halloween costumes, the whole shebang. Okay, so if content is the engine running things today, what's going to fuel the growth for tomorrow? Well, the letter points to two gigantic initiatives, advertising and artificial intelligence. Let's look at these two pillars of their future. First, ads. It's quickly becoming a beast for them. Best quarter for ad sales ever, and they're on pace to double ad revenue next year. That's a huge new income stream. And then you have AI. It's been the secret sauce behind their recommendations for years, right? But now they're all in on generative AI, calling it a significant opportunity to completely reshape their business. So what does that actually mean? They break their AI plan into 3 simple parts. First, for us, the viewers, they're testing things like conversational search, so you can literally just ask for a funny movie from the 90s. Second, for the creators, they're using it as a tool for things like the de-aging effects in Happy Gilmore 2. And third, for the business itself, they're using AI to make their ads smarter and way more effective. Okay, so we've got a healthy company that's innovating like crazy. So let's wrap this up by looking at what's right around the corner. And believe me, they are not slowing down one bit. The lineup for the rest of the year is just stacked. We're getting the final season of Stranger Things, the next Knives Out movie, more live NFL games, and another huge boxing match. They are absolutely ending the year with a bang. And their own forecast shows that confidence. They're predicting another quarter of really strong revenue growth, almost 17%. And they expect that profit margin to bounce right back up to nearly 24%. They're basically telling Wall Street, get ready for more of the same.
So, to circle all the way back to our first question, is Netflix's reign under threat? Based on this letter, the answer seems to be a pretty clear no. But it also brings up a new, maybe even more interesting question. When you've got a booming ad business, powerful new AI tools, and a huge push into live events, Netflix is becoming something much bigger than just a streaming service. The real question now is, what does it become next?